Hello Wave traders, today is December 30th, 2024. This is the last video I'm making this year. Happy New Year! In this video I wanted to go through the results of some of the patterns, actually all of the patterns that I published on the YouTube channel. Let's go and take a look at the YouTube channel. The very first video was I published 8 months ago. 2024 election S&P 500 forecast. I predicted that this was going to be a positive year based on patterns that's happened since 1928, and yeah, it's up. S&P 500 is up. Let's see how much. This year, S&P 500 is up 23.81% so far, and I have a feeling it's going to continue for one more day. And let's go back. The rest of the videos start with Broadcom and AMD, WDFC, and so on. Let's take a look at how they did. The very first one, Broadcom. Broadcom, during this date range, 1029 to 1127, it actually dropped 10.92%. However, I manage this differently. I go to trend chart right here. And I see that Broadcom continues after a small drop, continues sharply up all the way to the end of the year. So comfortably, this is a pattern to stay in. And look at what happens. Broadcom took off. So this actually is, if it's managed, it's a very positive result. Next one, AMD. AMD did not do so well either, 5.03% during this date range. I see that right here. AMD drops and then goes up, but not very sharply. This is not good. So this is to get out with a 5% loss right there. Next one, WDFC. When you take a look at this date range, which is the 1st of November until December 29th, it actually dropped 7.5%. However, I clicked on MFE. See the MFE? And you see the light green part? The WDFC actually went up 10.58% first before dropping. Look, the average is 8.37%. Anybody trading this should be out after 8.37%. Usually when a stock goes up to the average gain, I set a stop loss right there. So if it comes back, I take the full average gain. How about the next one? PHM. PHM, average gain of 8.03%. It went up for the date range, 4.72, and additional 2.68. So it didn't reach 8.03%, so the real gain is really 4.72. Builders, average gain was 8.22%. It went up 2.12% for the date range between these two dates, but it also went up an additional 5.27%. So the real gain is right here. MSI, Motorola Solutions. Average gain of 4.29%. It returned 6.52. P-O-O-L, pool. Pool had an average of 5.06%. It went up 5.72 plus 0.8, so this is really a 6.5% rise to there and then dropping. You should have taken full gain of 5.06% out of this. DHI, Dr. Horton. Dr. Horton, average gain 10.85%, 81%. It went up 4.22 and then dropped 4.64%. So this would really be the loss. I wouldn't be able to make money on this one. I would have been waiting. DPZ, Domino's Pizza, average gain of 4.41, came back with 4.32. Toll Brothers, average gain of 4.13, came back with 10.52. Nike, this is a 25-year pattern. All this rest of the patterns we just talked about, it's based on the last 10 years. Nike is the past 25 years it's been holding. It's returned an average of 5.04%, and in 2024 it returned 2.87, went up additional 1.3, but this would really be the gain, 2.87. Here is the natural gas ETF. This is a 103-day pattern. It's a losing pattern so far, but it's still active. We're still in the middle of it. UNH, United Healthcare. It returns an average of 4.21% between November 19th and December 5th. This is when the report of the CEO getting shot came out, and it just dropped sharply. But it was going up beforehand. It went up 7.6 plus 0.34. You should have taken 4.21% when it was this high. I usually, when a stock goes above the average profit, I set a stop loss at average profit. So this would return average profit. Church and Dwight. This is a 30-year pattern, and it's 246 days. Let's just take a look at it. This is still active. So Church and Dwight has returned an average of 14.4% between 22nd of November and July 27th. Right now it's negative, but it's active and long ways to go. Let's actually take a look at how negative has the other years gone. So you see some of the other years, like 2019, it lost 30% and then went back up and gained 27% during the state range. The only real loser was 1999 based on last 30 years. LE, this one is a futures live cattle commodity. It December 10th until December 29th, average gain of 4.19%. This year it returned 2.34% and actually closed at a high. Yeah, see how sharply up it is? Ooh, it's a good time to short live cattle right there. Right at April 27th, it drops sharply. And GDX, that I came up with GDX on the Santa Claus rally video, that did not do so well. So the actual date range was 12/16 until 12/24, right, the Christmas Eve. It's made money last 10 years, but then it dropped this year 5.19%. I took a look at the trend chart right here, and you see it keeps going up. So not even thinking about fundamentals, although I am not sure if this is a great trade anymore, because this is gold is really inflation hedge. So that's one of the reasons it's been going down. Other years, it's continued going up. In 2023, it did not. But in this case, I am staying in this and thinking that this could turn around, but it may not be the greatest idea. So I don't recommend it, but I'm in it. And then there is the TradeWave's Santa Claus rally, which is this one. So between December 16th and January 6th, S&P 500 has returned. 82% of the years has been positive. This year is negative so far, minus 3.32%. Today is not doing so well either. But take a look at other years. Other years, it's gone down sharply and then gone back up and been flat. Especially with gold prices going down, chances are this could go back up. But then again, last time this Santa Claus date range did not return a profit was 2015. Would this year be the next one? I don't know, but time will tell. This will, I mean, even if this doesn't work this year, this date range has been holding for so long, this is going to work other years. Many of these other profitable years, it dropped sharply, like 1932 dropped 6% and then closed up 3%. Here's another year. 2008 dropped 6% and then was positive 2%. 3%. So it still has a chance, but we'll see. We'll see if it doesn't hold this year, it's probably going to hold next year, or at least for next several years. Now, I created another portfolio and adjusted, I call it the daily results that were adjusted. So these aren't just the patterns, but they are the managed patterns. And with the managed patterns, I don't have GDX in there, and I don't have live cattle in there, and I do not have natural gas in there. But overall, there's a 6.54% straight profit on this. So this said, it actually did pretty well if it was managed. If it wasn't managed, then it was flat up. It was if you didn't manage this at all, and it was positive by 0.65%. With managed, 6.54%. This is the result for the patterns that I posted.